Hello, this is the 4-minute morning, which has usually been taking 5, and today's date is Crypto Day, Monday, 14th day of May. I'd like to welcome you to this video. Of course, everything you do within your own risk and your own reward, a very risky, rewardy business. Crypto trading most certainly is. And the daily chart for Bitcoin had its run above the 18 average starting April the 12th, but as we can see, it fell below here a few days ago. Since then, a couple small up days, not that much for gains, and it's pretty much given it all back in today's session, which is currently down about 3.5% for the day. Let's take a look at this on a shorter term time frame. And we'll start with the 400-minute. As this was in a uptrend, everything was nice and bullish, but this level of resistance got taken out in here, and that to me is what I call the typical failed move. I use the word typical because I've seen so many moves like this within markets like the traditional market, stock market, COMEX, Forex, etc. So therefore, it changed its direction in here, had a leg down to this point, matching up within this previous area, but it resisted the 18 in here. This is when I thought and stated that a short position was when it would be a good time to do so. I didn't do it, but it obviously has been turning into be so far. One leg lower towards here, meeting up again with the 18 average of highs, and it's immediately rejected it within today's session. Only an hour left. So this move in here is practically the vast majority of this period, because 400 minutes, that's 6 hours and 40 minutes per period. I use the 400-minute because that represents a 5-day moving average within the 18 period. When you do all the math, that's how it's calculated too. When looking at this on a 60-minute time frame, the last significant fall in here had a bottom come into place. You have your high, you establish some higher lows, and notice again, typical move. There's your little bit of a breakout above that high, and it instantly got rejected. But since that's been the case, it has done the little flag pattern. In this case, this would be that of a bearish flag, or the market has corrected this down move via the 60-minute time frame through time, since it is now met up within the 18 average of lows. So what it all comes down to is it looks like we're going to have further decline, and we'll move closer and closer to this key, what I call must-hold Fibonacci support in and around the 7,900 area. It can obviously pierce a little bit below that and still be holding for such, but if this little area doesn't hold, it gives in and it shows further weakness below, well, the danger of this market is quite interesting, because on the 3-day time frame, markets are holding in within this 18 average. I'm going to switch this to the Bitstamp exchange. And within such, and the lines for the more longer term, if it makes this lower high, it comes back. This is test number 3 of this area. I won't be liking the odds too much of it holding. I know it can, I just don't like the odds it would do such, and I'd be looking for a move, of course, down to this level here. Still, as this is being said, this test of coming back to the rising 18 hasn't failed, since it's still within it, but it still needs to have a very clear break above this 10,000 level to deem that this market is in a bullish ready or ready to go. That's the earliest I can actually start saying that. Thank you for tuning in, and have yourself a great day. Bye-bye.